Joining us for What a Week, Mia Kruger, Lindsay Williams, David Shapiro. We've got a number of elements to discuss, and perhaps we start with the Airbnb listing. That, of course, shooting the lights out, and the negative coming through on jobless claims in the US, where we saw the highest level of jobless claims since September. Mia, let's get you to kick off on the international side, and then we'll bring in our two gentlemen.
Yes. So, I mean, like you mentioned, the Airbnb IPO was a stagger success for them. They opened the day nearly doubling the share price. They had their price initially pegged to the $68. That was already raised from an earlier valuation of about 40 something. I can't even remember exactly what it was at. But it seems to be that the market is very, very positive and very excited about a listing and just buying it at any price. So that always makes me slightly worried about the valuation. But you know, it's the flavor of the month, and it's been great for anyone wanting to sell the share that they held with the IPO. So we'll see how this goes. Yeah, that's the first thing.
And then claims showing that actually all is not as
Exactly. I mean, the US hasn't even come to a second a decision on a further stimulus package, and then we get new numbers out of jobless claims, with first-time jobless claims numbers actually surprising to the upside. So vaccines positive, unfortunately jobless claims quite negative, and the market seems to be a little bit more cautious this week.
David, when you look at those jobless numbers, you look forward to December the 26th when a lot of people lose their benefits. I mean, millions of Americans lose their benefits. Then, yeah, all is not rosy. We've had a nice little recovery. Certainly the market's running ahead of Wall Street, rather running ahead of Main Street. What do you think? Do you think this is not only the second wave of virus infections in the States, but also a second wave of a downturn? Not as bad as the first one, David, but a second wave nonetheless.
I'm surprised that the markets are responding the way that they are. In other words, that they haven't reacted more negatively. And I'm trying to work my head around it all. You know, if you listen to what Mia said about Airbnb, where a share comes on or is listed at 68, which is already an inflated value, and then trades, I don't know, 144, I don't know where it closed, or some ridiculous value, suddenly you realize the demand for equities. We're going into a super bull market. And I mean, these are signs of a super bull market. And it also explains why interest rates are going up in the United States, because people, you know, when I say interest rates, the 10-year bond is going up because what's happening is that there's a withdrawal from the bond. In other words, you're selling the bond to take the cash to go into Airbnb, to go into what's a Door Rush and all the other, what's it called? I forgot. You know, all those other places. I mean, and and there are a lot more IPOs coming. We see it in our market here on the JSE in the second way, you know, in the smaller caps. They're going up 10, 15, 20% a day. So you're getting an exuberance here where people do want to go into the market, which is very indicative of some kind of bull market. So, yeah, we're going to have an exciting time. Where it ends against the backdrop that you're painting and against the outbreak, you know, the further outbreaks, that we're going to just have to work our way through. You know, I don't think anybody can make a decision, but yeah, you know, there is this disconnect happening. I enjoy it. I love these kind of bull markets. So, you know, I've been waiting for this for 10 years plus. You know.
Talking about a disconnect, of course, GDP is never a favored barometer, David, especially from your perspective. So again, the base case here and shooting the lights out from a GDP perspective. And then, of course, the current account surplus also rallying extensively, but it's all about the base case. And this is not an indication of the underlying economy. But the Rand, I mean, the Rand is strengthening. Again, give me a sense on the local news flow. And
listen, you got to understand markets. And the more we try and think them through, and the cleverer we think we are, the dumber we actually, or the dumber our decisions are. You know, if you look at the people buying the Rand, they don't know the difference between Zonda and Zuma. You know, they have absolutely no idea about our mining numbers, our GDP numbers, all of those. They have no idea. It's just the other side of an equation. The dollar goes weak, the Rand goes strong. and that's the way it is. What can we get on rates here? In fact, we haven't really seen an inflow of money. So I think we mustn't intellectualize it too much. Just let the traders, let the traders take control, as we've seen with Airbnb and DoorBrush or what's it called?
DoorDash.
DoorDash, David, before we go any further. Mia, talk to me about the rand dollar weakness.
Yeah, no, I mean, I think predominantly this is a case of dollar weakness more than anything. I mean, when you see all the other emerging market currencies also strengthening, and you see what's going on locally, I mean, yes, we had slightly better numbers than anticipated CPI, but I honestly don't think that was actually the driver behind dollars or the rand strength rather. I think when you consider what we've seen over the past couple of months locally, we've seen record number of unemployment. We are in a very tough position. We can't even keep our economy sort of on a flat level because we don't even create 600,000 jobs just to keep with the increase in our population per annum. So if you look at all those sort of numbers, also the production numbers coming out this week, it's definitely not a case of rand strength. It's definitely for me a case of dollar weakness.
Mia, let's have a look at those numbers that came out of South Africa this week. We had inflation moderating to 3.2%. 0.1% gain from the previous month. That is rand strength, and lower fuel prices because of the rand strength. That's simple, because although demand is getting a little bit better, it's coming off such a low base that there's no demand in the system. We had mining production yesterday minus 6.8%. I think it was a little bit better than the previous number, but still mired in the red. And we had the GDP number, 66% increase from a minus 52%. So you can't really gauge that. It's far too volatile. And I think overall, the year projection is minus 8% for 2020. So that's also a bad number. And what was the final one? Yeah, the current account balance, which is fantastic. But is it because...
very strong.
What's that?
No, I was saying the current account balance in terms of the surplus coming through strongly.
Yes, very much so.
The thing is, we need to remember that we're not really importing.
Yeah, that's the import. That's exactly what I was going to say. It's not because suddenly we're exporting a lot and our economy is chugging along nicely. It's because there's no demand, so we didn't import anything. So what's your assessment of this week? A stabilization, but it's still pretty bad, Mia.
Exactly. I think, it's difficult for people reading the news to understand these big numbers. When we read the GDP has increased by 66%, it gives a false sense of hope. When you have to really look at the like-for-like numbers, we are still going to be at the end of this year, probably about 8.2% below where we were last year. And that's not a good number. We've got higher unemployment, lower growth. So all of that is sort of the reality check when you consider what's been going on with the rand. Again, with the current account surplus, it's not a case of us being such a great producer of goods and exports. It's a case of we don't have any demand here because the consumer is under such pressure. No one's really investing, and we're exporting more than we're importing. So I don't think it's a good news story, and that's the reason why I'm saying that the rand hasn't really discounted this news, the reality of the local news, when you consider the level that we're trading at. But look, I'm not unhappy about the level of the rand, because that means you can actually buy foreign assets at a very, very attractive price.
Well, let's sum it up. Lies, damn lies, and statistics, Lindsay. I think we'll leave it there on the economic data, just throwing it's a positive spanner in the works. But we also need to talk about some of the underlying companies in the ICT arena. Now, we didn't talk about EOH last week, and the stock rallied substantially on the announcement of its results. The company has been in the headlines. We've seen the Chief Executive Officer, Stephen van Coller, testifying before the Zondo Commission, and certainly bringing Jeff Makuba, the current ANC mayor, into the spotlight, as well as Zizi Kodwa. That's the background. But at the end of the day, David, have you been looking at EOH? Because the stock is really climbing nicely, and it's been through a really tough year.
Yeah, well, it's picking up from the bottom of a pit. I mean, if you consider where it was a few years ago and the huge damage that was done to the business. I mean, it's a fraction of the market price that it was. I don't think Stephen Collins knew what he was in for when he came, but credit to him for applying his mind and trying to turn the company around. You know, they've still got to give Microsoft...
If you do see a tale of two cities here, we've got the old EOH, Asher Bobart, Zunaid Mayet, and let's park that because we know the value destruction. But if you start from a clean slate and say what management is doing, would you celebrate the new EOH?
He's got a lot of work because he's had to sell off a lot of the assets, you know, and it's been one of the characteristics of the South African market. We can take Sasol, we can take Aspen, we can take Tongaat, we can take all these businesses that have had to sell off the crown jewels or some very profitable operations in order to alleviate debt, in order to get some kind of business or retain some kind of business on which they hope to build a new business. So this is going to take a long time. EOH, I have to say, had very good skills. They had bought some excellent skills. So the skills are there, but I think it's going to be a slow process out of ICU. You know, to get the company fit again. But what I am doing, and Lindsay knows what I'm talking about, you know, I've got my so-called takeover portfolio, which he calls the Hail Mary portfolio, and it's companies that have been in that position. And I will add EOH to my list of, you know, hospital stocks, because I think we're going to make money out of it next year. You know, it's not going to be a big company, but it's going to be, you're going to make money out of it next year.
Bronwyn, we were talking about it last night on the podcast, Bronwyn and Mia, and we came up with all these names, or rather David and his co-presenter came up with all these different names of companies, and even PPC, for goodness sake, they came up with their numbers this week. The share price was 40 cents at one stage. It's more or less tripled since then. In fact, more than tripled since then. So many different companies that have been beaten up and written off have bounced back in the last 2 to 3 months spectacularly. If you caught it right and you had a small cap fund, any stock that had a market cap of below $1 billion, you would have done so well. And David mentioned ICU just now, and he said to me after the podcast, try and come up with a name for the fund that's got something to do with ICU. And David, I think you just call it the ventilator fund. Simple as that.
But I think the point, Bronwyn, is that there are those businesses. I think the discussion was very relevant about the South African economy. I mean, and things are tough. Things are going to be tough for banks. We saw it in Paula Henratty's statement coming out, very honest about how tough things are. You're going to see it. You saw it from Standard Bank. But these are businesses like EOH, like Stephen van Coller's EOH, which were absolutely written off and are just coming out of ICU, you know, into the real world. They're going into high care. And I think those kind of businesses, you'll make money out of them because the share prices have been so devastated. It's not necessarily a reflection of a big turnaround in the South African economy, but it's opportunist fund in the true sense of the word. So that's where, you know, when you ask me about EOH, I think put it into that category.
And Mia, how do you feel about the
I mean, I agree. I agree with what David said, and I like his portfolio, because what I like about it is the fact that it's based on valuations. We look at these companies, and even though they're not, you know, we can't compare them to what they were before, we can always look at what they can become from here. And they're so down and beat up at these low levels that they can actually just do better from here. And that's exactly what's starting to happen. They don't have to do much to already improve the numbers at the company quite a lot. And then when you look at the share prices, I mean, markets are always forward looking. So that's the benefit of these companies also. People bought these shares now at very low valuations and could get in here, and they've already made some money. So I think that there's still a couple of these hospital companies out there, as David likes to call them.
The ventilator story.
Sick patients.
Lindsay, what about the Bytes listing? Have you spoken to anybody about the pending?
I couldn't understand that. I had someone explain it to me, because I looked at my screen one morning and the underlying share price fell, Altron share price fell by 70% or something. And then someone gave me this convoluted story about notes and separate listings and people receiving this for that. And quite honestly, I couldn't understand it. I'm not clever enough. David's your man there.
David, can you unpack it for us?
I remember Bytes from the old days, but this is Bytes UK, which has been a very good operation. Now, as I was talking to Lindsay as well, I mean, we've had these conversations. Bytes is not an intellectual property company. In other words, it's not creating its own products that are going to change the direction of the world. This is not Airbnb. This is not a Facebook. This is not a Google. It's nothing like that. It's simply a very good kind of company. It's almost like an EOH. Very skilled people there who apply programs or can kind of modify programs for your kind of business. So it's a very good services business in the UK, and it's been doing well, and hence the reason that they've actually listing it, giving it a life of its own, simply because they felt that the value of Bytes was not embodied in the Altron share price, and therefore by splitting it up, 1 and 1's going to make 3. I think that's the whole basis around it. But is it going to be one of these staggering companies? I don't think so.
Yeah,
okay.
give us your take.
Yes, I mean, I agree with David. I think it's more a case of that the unbundling, if you want to call it that, made sense. The listing in the UK made sense for them to unlock value for shareholders because it wasn't valued right within the business. But that doesn't make it a company that has the biggest big new prospects. It's still the same Bytes that it was. So it's a good services company in the ITC sector, and it's probably going to grow well, but I don't think it's going to shoot the lights out either. I think it's been a case of it's now been a move to actually unlock value for the shareholders, and that's now been done.
The one thing that I want to switch to now, Bronwyn, if I can, is the data that I was describing, or rather asking Mia to describe, out of the South African economy and the recovery in the stocks that David was talking about. This is all fantastic, but don't forget it's all coming off very, very low bases in both cases. So to me, what we must look forward to now is the first and second quarter of 2021. And I was trying to think of an analogy, and I was thinking of Bronwyn in her bath playing with her rubber duck. And you push that rubber duck under the water, Bronwyn, and it bounces straight back up and sometimes actually shoots through the surface. But then it bobbles along in your bath for a long time. And I just wonder whether the first and second quarter will be a rubber duck bobbling along for the South African economy and these stocks now that they've bounced back above the surface. Not to what they were, of course, but you know what I mean. That's what I'm worrying about in the first and second quarter. And I'd love the team's assessment of that analogy.
Yeah, well, let's move away from the bath analogy, but perhaps, I'm actually speechless. One of you are going to have to pick it up here.
Do you want me to? I'll give you my view. Sorry, I don't know whether this is directed at me, but Lindsay, the one thing about the South African economy or South African market, and it's almost like the UK market, it's made up of so many different parts. Suddenly we have an iron ore price of 150, and everybody's been talking this iron ore price down to 40, 50, and believe me, it's coming. They tell me it's coming, and I'm still waiting for it to come. It never comes. So you're getting kind of metal prices that we haven't seen before. We're getting a China that's growing in strength. So you might have an element of our market that does okay. The BHPs. These are not South African companies. They don't do anything in South Africa. We discussed this when you weren't here last week with Magnus. These are companies who don't do any business in South Africa. Even Anglo-American, even Anglo-Gold. And yet there is an element there that can push them up because of the recovery metal prices. Then you've got SA Inc. and you've got then the hospital stocks. Your question's probably directed at SA Inc. Yes. And that's where I agree with you. I'm still very cautious of the retailers. I'm still very, very cautious of the banks, and for the reasons that that Mia was discussing in the earlier part of the program, and that is that we've got high unemployment, no growth. It's a very difficult backdrop on which these companies can grow. So you might have elements of our market doing okay. But I think from the SA Inc. point of view, I'm with you. I think we're just bobbling along like that rubber ducky.
Yeah, weigh in.
Yes, I mean, I think this is sort of, despite the fact that it's very South African centric, what we just spoke about, I think when you consider the virus, how the numbers have actually increased in the UK, and the US and and Europe, all after their summer holiday. I'm a little bit worried about people planning these extensive holidays in South Africa. Everyone I speak to who lives in Joburg and Pretoria seems to be heading down to the coast. And there was an interview with a guy from the travel industry on the radio yesterday, and he said that there's no more accommodation available in Plate for the holiday. That really worries me, because it seems like people say that they are aware of the risks, but they're actually not paying attention to the numbers. The numbers are now much higher in South Africa than it was with the first wave, and that's the same story that we've seen sort of in the Northern Hemisphere when they had their summer holiday. So I'm slightly worried about that. Not too worried.
Mia had warned us that she might drop out there. She's not too worried. We'll make her pick up on that when we come back. Lindsay, I hope you're not going anywhere for the holiday season.
No, I'm not going anywhere. I was going to come to South Africa. I had tickets booked for December the 31st, and I've cancelled them because exactly what Mia said. Plettenberg Bay completely full. Nowhere in Cape Town. I mean, you can get somewhere, but it's not exactly where I want to stay. And a friend of mine who has a house in Hermanus invited his brother and their family for Christmas Day in Hermanus, but the house isn't big enough to accommodate both families. And he tried to, the brother that is, tried to book somewhere in Hermanus. There is nothing available. I promise you, it's going to be a bonanza for these small towns. It's going to be fantastic. But on the other hand, as Mia said, from a personal finance point of view, maybe not prudent.
Exactly. And David, I'm not sure if you saw Angela Merkel giving her Christmas speech to the German population. I mean, imploring people not to go and visit their grandparents.
Bronwyn, every New Year or around about every Christmas time, the newspapers in South Africa publish the beaches in Durban, North and South Beach, etc., which is just swarming with holidaymakers, swarming with people in and out of the sea. And I always look at that image and I'm going to say, how are they going to control that this year? What kind of force or police force do they need to close those kind of beaches and prevent people? And the other thing is that, when you want to go to the beach and you've packed your picnic, you're going to find some kind of beach. It's like the balloon. When you stand on a soft balloon, the air goes from one area to another. It's almost like the Lindsay's rubber ducky kind of example. But you're going to get that kind of attitude. And believe me, when it comes to preparing lunch in Plate, and the women, and shame, I shouldn't be sexist, the men and women rush to Woolworths. They're not going to stand patiently waiting for an hour to be served outside there, just standing there. Forget about it. It's not going to happen. And those are my deep, deep concerns, is that it's going to become uncontrollable. We're not a disciplined nation, no matter who we are. So, I think
the sad thing is
we lost Mia to it now, but we're carrying on. It is a massive concern.
So Mia, you sparked an interesting conversation. Then David caught himself because he did say that the women were buying the picnics for Plate, but he corrected himself and said men and women. So you're lucky that you missed that interjection. But everyone basically saying, we're going to lose a lot of ground. I mean, you think this economy has been in lockdown for so long. We've given up so much. I just hope that we don't retrace all the ground and the hardship that we've been through this year.
I absolutely agree. And I think that was just a very good example of social distancing that I'm applying when I left. But the fact is that, I think on a global scale, that there sort of might be a much longer sideways move in markets due to the fact that economic growth is anticipated to pick up, but it is taking longer due to the fact that the virus is actually affecting more people. So I've actually read various reports on the economic prospects for 2021, and also on prospects around the markets and various asset classes. And there's an interesting sort of trend that I picked up, and one of the reports that I read actually referred to it as a sideways crash. Instead of seeing a market correction to come back to proper valuations, actually just seeing sort of a very long sideways movement in prices on the markets and the economy catching up to that. So I wouldn't be surprised if that's something that we see. I mean, we've seen that before during this past very long bull market that we've been in, and it might actually be on the cards for us again.
Yeah, it's a good point. And Bronwyn, I mean, if we're probably wrapping up quite soon, so my elephant in the room would be.
I thought it was going to be a rubber ducky in the room today.
There's no rubber ducks, Bronwyn. That's your province. Now, I'm talking about the amount of money going into mutual funds in the United States of America. $115 billion worth went in 1 month, which was an all-time record. And then when I used to speak to Di Turpin of the Unit Trust Association of South Africa, she would always say that the retail investor gets it wrong, Lindsay, consistently. And I don't know if that's the case in the United States. Maybe David could confirm or deny that. But if all that money is going in and a lot of it is retail money, then perhaps it's a warning sign that we're not going to have a crash. We might have a little pullback, but not a crash. But as Mia says, a sideways crash. And that goes to my point of watch out for the data in the first and second quarter of next year.
And Lindsay, you said we were close to the end of the show. David, do you want to come in here with a closing comment, and then Lindsay can wrap it up? Because he was AWOL last week, he's forgotten his duties.
I think that if we can come out with a slight positive result in 2021, in other words, if we can grow, and I'm talking in dollar terms, 5% or thereabouts, I'd be thrilled. I don't think we're going to get anywhere close to the kind of gains that we had here for the very reasons that we've been discussing. I think that there's going to be a lot more sober kind of sideways movement. I think we had it from 2000 to 2010 in US markets, if you ever go back and look at that. So I'm kind of positioning myself for a 5% best move in the market for 2021.
David, thanks very much for that. That was What a Week. With us this morning was Mia Kruger from Kruger International, myself, Lindsay Williams from strictlybusinesspodcast.com, David the Ventilator Shapiro from Sasfin Securities, and Bronwyn Ducky Nielsen. What a Week. We'll be back same time next week.